All right, folks, welcome back. This is the ICT Mentorship for September 14th, 2021. Daily dollar index chart. All right, before I get into this, obviously I counseled you on the economic calendar. Take a look at it for yourself. This Thursday looks to me like it's going to be the opportunity for the week. We have basically been treading water for this week so far. We had today's trading and Monday's trading still inside the range between the bearish order block and the buy side of balance, sell side inefficiency. Came down, took out last week's low in here. Didn't quite completely close that in still. So we're just hanging around inside of this range. Again, the range being the bearish order block and the fair value gap that's seen here in the form of a buy side of balance, sell side inefficiency. We're going to take a look at this on a lower time frame. Right, looking at the hourly chart on dollar index, you can see we've had a breakdown. Now we had initially had this outlined yesterday for a breaker. We did see it trade down into it and then rally back up. Then it took out this low. Now we have relative equal lows here. So there's a larger pool of liquidity here that how we trade into this imbalance. At the time of this recording, I took this snapshot right there. So if it wasn't so clean up here like this, I'd feel confident that it would go here and then maybe start to work lower to take out the sell side liquidity pool here. The reason why, because we have these relative equal highs that were taken out there. And then we have one more attempt going higher there, taking out that. So now we've taken out this short-term sell side liquidity pool, but notice how shallow it was. It just went just a little bit below that low. Over here we have low resistance liquidity run signatures with the respective lows here. So if we do pass down below this again, I wouldn't expect it to be going down just to take out some sell side and then go higher, because we've already had the buy side taken multiple times. Sell side's only been taken once here, and it's been done on a very shallow run. Lots of liquidity resting below here. So we're going to see what we get in response to Wednesday's trading ahead of the high impact news drivers for the calendar for Thursday. All right, and 15-minute time frame dollar index. Relative equal highs in here. That to me looks suspect. They may want to sweep above that. Nothing above these highs here and this is of any interest beyond that. Like, this is the highest I think it should go back to. If it does at all, I don't think it needs to do that, obviously, but right in here just looks too clean. And they drove it down real quick. The breaker did not work in here because we're in consolidation. I told you yesterday that the high impact news driver is Thursday. So prior to that, lots of manipulation, classic what we've been discussing for now months. You have to be very, very nimble. Pick your shots, pick your choice setups, and the setups are going to be dictated by the pace established on the economic calendar. Okay, so Thursday's calendar to me, that's what everything's going to be whipsawed back and forth ahead of, and then that's going to be the one move of the week that makes the most sense in my opinion. Again, you can see how we dipped just below that short-term low there, traded back up in, pushing it. It looks like it may want to run up in here. Euro dollar daily chart. Nice reaction off of the order block. We had a continuation on the upside today. Didn't take out these highs in here. I was watching it live, thinking it was going to expand up and take that out. It hasn't done that. Okay, we came all the way back off the highs for an indecisive candle here and an indecisive candle here. But from a narrative stand, it's delivered like we were looking for, but just didn't quite get up into this area in here, which is again why I am trying to push very hard for you to understand that I might be close to what the market's doing, but I'm not seeing the precision that I would like to see, and this is why I'm very reserved. I'm not trying to be hard on a definitive one-sidedness. I mean, I have to tell you what I think is going to happen because I'm obligated to that in that respect. But I guess I'm really not obligated if I think about it. But I do it because I want you to know what my opinion is. but I also want to season that opinion with reality, knowing that I'm not going to be putting anything to work in terms of a trade or risk. But for the sake of reading price and trying to interpret what it's doing right now, which admittedly, I'm going to tell you, it's difficult. Like, this is very difficult for me to dial in because the markets are simply just doing nothing. I mean, unless you're trading on these lower time frames, which it's doing a lot of stuff there, but on the higher time frames, it's just, you're going to have to wait. There's no other way of saying it. And unfortunately, new students, new traders in development aren't strong in the patience area. So that's why it's important to have someone that's been doing this for a long time. It doesn't necessarily have to be me, but someone that's been trading for a while that knows what it's like to have to sit on their hands a long period of time and wait for better conditions. Hopefully in the coming weeks, because we're now entering the fall months, we're seeing the end of the summer doldrums. We're in September. Things start getting really nice, the second half of September going into October, November. So be mindful of that. Euro-dollar, hourly chart. We cleared this buy-side liquidity pool I mentioned in yesterday's recording. Ran up, traded back down below sell-side liquidity. We'll look at that on a 15-minute time frame. And then pumped it up into, but it didn't quite get up in here. I was hoping it was going to run to that, but it basically came back down. And this is interesting here because we have buy-side imbalance, sell-side inefficiency, last down close candle on the hourly chart. We're trading into that bullish order block. And unless we need to come back down into here, which to me is problematic, we don't need to come back down below this low all the way to here to get into that imbalance and order block. I don't think that's necessary. I want to see this remain open as a breakaway gap. And we've already seen sell side taken here. So what's the logic for it to come back down here and go below that low? That's not good. That means this could be potentially a breaker. This is a failed run to liquidity. So the algorithm defended all of this, at least on this pass higher. Now we're retracing back into this buy side imbalance, sell side inefficiency, and order block. So again, this needs to stay firm and not give up this low, in my opinion. Furthermore, we can see that this low was taken out with this low here. So we've already had a stop run event there, and then they sent it to new highs. I like that. So I'm not, in normal conditions, not like what it is right now, because the risk is elevated. If we return back in a situation like this, I like these types of setups because we have relative equal highs. We have relative equal lows that's taken sell side. We rallied up. We've taken sell side here, and now we rallied. We left these intact, didn't trade above these highs, and now we're retracing back in. If it was any other time than what we're in right now, like say it's the first week of October, I would be buying this right there with 3.5% risk on the trade. Why? Because we have the backdrop of sell stops taken here, sell stops over here taken. We rallied, sell stops taken there, and we pumped it above into a higher high for the 14th of September, 2021, and we left these highs here. So there's a lot of liquidity there. This, to me, would be, not now, I'm not suggesting it at all. It could develop into this, and I don't want credit if it happens. Okay, I'm not going to be here, pat myself on the shoulder, good ICT. No, I'm not. I don't want any kind of credit right now, because if I'm right, that's great. If I'm wrong, I told you so. So I don't want credit either way. I want you to keep in mind the elevated level of risk, so that way we're sober-minded. We're not trying to think that we're better than we really are. We're not trying to attribute luck and circumstance if things pan out in a certain manner, whether I say it or whether you think it's supposed to happen. Try not to be convinced that what you're doing right now is skill, because it's not. I don't attribute anything that I'm doing in terms of being right, because you heard me in the past where if I say something's going to happen and I come in and I'll say, look, see, it did what we were saying, and this is what the difference is, blah, 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 blah. I'm not talking like that now because I understand the limitations of me as the analyst, and I also see things in price that are signifying that this is not the time for me to try to press my skill set hard. I'm going to reserve that for hopefully in the coming weeks and months. But with all that said, if any other instance of this framework here setting up, I would be buying that with the large side of risk on the trade and expect it to run up into here. That's what I would expect. Understand what I just said is not code. It's not an invitation. I'm not trying to give you a signal. I'm not saying that euro is a buy. I'm just saying in contrast so that we know how I'm thinking, what I'm looking at, why am I not doing anything in a trade, what is causing me reservation so I don't want to do it. And in between the times that we are in right now, where elevated risk is, and me wanting to take trades, what do I do and what should you be doing to continuously grow in your understanding? Well, what I'm showing you here, I'm just giving you ideas about what I would expect if it was any other time than what we have right now. And for whatever reason, that may not be something that is appealing to you. You may not find any value in that. But to me, as a seasoned veteran in analysis, I would greatly appreciate something like that because it frees up this sense of, I need to know, I need to do something, I need to trade. You don't. You don't need to trade. You need to be respecting the level of risk and wait for the easy setups because right now it is not easy. It's 50-50, bullish or bearish. There's no definitive direction whatsoever. The only thing the market's doing is running stops. Buy side, sell side on lower time frame charts. That's all it's doing. And it's pulling right back to the mean. All right, here's the euro dollar, 15-minute time frame. Order block, fair value gap, sell side liquidity pool. Trades down into it there, runs like gangbusters off of that. Takes the buy side liquidity out here on a day that looks like it's created a high there, and then ran it up one more time. So what we get in here in relationship to that hourly order block, to me, sets the stage for Wednesday's trading into Thursday. But I don't think we need to come back down here because we've already ran stops over there. Why do they want to come back down here? To go back below here, to me, is not bullish. And this whole thing here may end up becoming, if it does go below that, may become a breaker. And then, obviously, that would create some bullishness on the dollar index. Okay, finally moving into British pound versus dollar or cable daily chart. We ran above relative equal highs, dug in a little bit deeper on this bearish order block, basically mean threshold essentially there. Ran up into that and then rejected that rather sharply. And again, this pair is in a hard consolidation. It's difficult, folks. And this is why I said I do not want to call anything in this pair, because to do so, for those that are new, it's just going to wear on you thinking that the logic isn't there, the skill isn't there, the understanding isn't there, and the methods therefore must be flawed or no longer work because they supposedly quote unquote changed the algorithm. They haven't changed anything. This market is simply waiting for an injection of interest. Now, it may need to be inspired with some kind of chaotic move that's a result of something happening, geopolitical, something along with the pandemic, a war event. I mentioned this multiple times, but I want to keep it on the forefront of your mind because that way you understand there's things that we are waiting for that are outside our control and outside of visibility. Like, I'm not trying to be clairvoyant. I don't want to be viewed as some kind of a prophet because I'm not. But I know that the markets right now are being held in a stranglehold. And the only way they're going to spring to life is something external, because there's nothing interest rate driven. There is no trend at all in any of these pairs. They're in a large consolidation. So when you have these, now rewind this video for about a minute or two and listen to what I just said, because that's definitely something that should be in your notes. Because if you ever enter in this situation again in the future, 10, 20, 30, 40 years in the future, this viewpoint is what you're going to lean on. Because if the markets are in consolidation, you don't want to think trend. You don't want to predict a trend before it starts. Like, when I first started, there were books that were written saying, oh yeah, the breakout of a consolidation, usually when it breaks out, it's usually going to keep on going, because the longer the consolidation, this is how I learned from Ken Roberts, who never made me any money. But these long consolidations, once they break out, they tend to keep going on into a long trend. So that's the logic that lost me money. And you don't know, and I don't know how to see the beginning of new long-term trends. Think about it. None of my lessons, not one thing in YouTube, not one thing in any of this mentorship, nothing teaches you that skill set because it cannot be learned. You have to let the big boys get in the dance, if you will, with the central banks. So when the large fund traders put positions on for long-term trend trading, the counterparty to that is the commercials and or central banks. And you let them establish these long-term trends. And inside those long-term trends, you operate in that context. And if you're going to be trading against it, then you do it with far less risk. And you try to do it as nimble as you possibly can. And you pay yourself aggressively when it's counter trend. But then when you're trading in sync with these trends, you take far less off the trade on partials, leaving more on. And you try to milk these long-term trends for whatever you can get. And it creates your strong bias. If you don't have a trend that's a macro level trend, that means something that's visibly seen on a monthly, weekly, and or daily, then you're trading in a consolidation and you have to understand where liquidity is. And if you don't understand how that is impactful to your trading, you're going to lose. You're going to lose money. You're going to lose interest because you won't have a sustainable run in success that would keep you motivated. I mean, everyone's going to lose. You're going to have losing trades. You're going to have wrong analysis here and there. But identifying that as just getting it wrong once in a while versus trying to force something in a market that simply isn't going to provide you what you're looking for and then expecting a winning result, no matter how many times you do it until your account's blown. That's stupidity. Okay. And I know it intimately because I did that in the early 90s. So please listen to me when I tell you that this environment, I know it intimately. I know how painful it is for you because you want the things to start moving around and get back to seeing things easily done. And yes, you can see easy price moves on a 1 minute and 5 minute chart. Yes, they're occurring. But on these time frames, the higher time frame daily, which there's a lot of you that want to be position traders in here now. Where you all came from, how you ended up to that conclusion, I don't know. But God bless you. It's not my cup of tea. But look at what's going on right here. Just look at what's happened since August. We're sideways. Yes, there's been two primary swings. We've had this leg here, and then we had this leg here. But we have not had trends of any meaningful duration. And this is what I mentioned before we even started doing all this. I mentioned it. Think about like this right here. It's going to do that just over here. And it has. It's done the same thing here over here. It's just consolidation. It's not running higher. It's not running lower. And I don't know, as no one really knows, what the catalyst is going to be for these markets to start springing back to life. But I am certain it's probably going to be something adverse. It's not going to be some good news. It's going to be some kind of bad news, something chaotic, something adverse. Okay. And that's okay. We can't prevent that and we can't change it, but we can utilize it and view it as opportunity, which manages fear. It manages stress and anxiety. And we see things as, okay, well, that's an opportunity for me to better myself. And I'm not going to fall victim to being fearful of some outlier event, something that could create a problem for most people. So that's how I kind of like manage all this stuff from a psychological standpoint. And I don't look at this stuff that's going on in the world as anxiety provoking. I can see how it would be for many, but I'm waiting for these things to present opportunity. All right, here's the pound dollar hourly chart. You can see we have relative equal highs in here. Liquidity above that, we ran right into it here. And then very sharp breakdown in here. So watch this level there. I don't think it needs to come back down here, but we did run rather shallow below this low. And then we pumped it up higher and we cleared out this high here. I said we would most likely end up getting to that, based on this market maker buy model. We ran it here and now we have a market maker sell model. So we have liquidity below here If it advances and speeds up and goes below here, I don't know if it's going to do that. But if it trades below this low here and doesn't fill in this area here, that could be a setup that would offer like a bread and butter type move, but it could just as easily just cascade and plow right on into it there. If this hadn't cleared out these relative equal highs, say it went up here like it did and then rolled down to this area here with this low intact until it ran through it, that would also be a setup kind of like what I mentioned on Eurodollar, because that would be one of those low resistance liquidity run signatures that I like to see with buy side resting above relative equal highs, coming back down, taking out sell side, rebalancing. That to me is a good trade. That is not what I'm describing here because we've already ran above there, taking out liquidity. So sell side in here makes sense to run that out below this fair value gap here. To me, doesn't make any sense unless it's extremely bearish and they're going to send the Federal Reserve into, the buy mode for the dollar. Okay, which, I don't have a strong opinion about that. Like, I don't feel there's enough in the marketplace to determine that. So I'm keeping my comments only really directed at the hourly and 15-minute liquidity pools and what I think might transpire there. If you go back and listen to the commentaries, I'm pretty much on point with those, but the daily, it doesn't give me any clarity except for what may be in concert with the lower time frame, hourly and 15-minute time frame liquidity pools. So I'm kind of like trying to figure out which one they'll run to next, because if they ran the opposing side, like for instance, right below here was sell side. We dug down into that fair value gap, rallied higher, relative equal highs here. So buy side's above there. So at this point here, what's it more likely to do? Is it more likely to go lower to take that low out? Or is it more likely to go higher to take out these relative equal highs? Buy side. But once it's taken that, look how fast the algorithm has really changed directions. Took out the short-term low between the high, low, and higher high. So that's a breaker right there. And it hits it there. And then we have a nice little bread and butter type setup. That's about 30 pips. So there's nothing wrong with that. Let's take a look at that on that 15-minute time frame. There's your bearish breaker. High, low, higher high, clearing out the buy side liquidity pool on the hourly chart. Then it cascades, breaks down below that low, trades right back up into mean threshold of the last down close candle. That's your bearish breaker. Hits that there, and then just rolls over. Relative equal lows in here. I like that. It hasn't really traded to that yet, but it'll be interesting to see how we trade there. And maybe has to dig up into this a little bit to rebound some. Or if it just accelerates and takes out that low, remember that this whole phenomenon here may be that on the hourly chart, because that's that low I mentioned. Let me go back up and show you what I'm referring to. That's this low here, but on the 15-minute time frame there. So 138 big figure right here. And just below it, and let's go back up. And 138 and just below. So that's that low right there. So on the 15-minute time frame, it could treat this low the same way it did this one here, where it breaks below, it comes back up, hits it, and then sends it lower. And that, my friends, is going to be it for today. I know it's not a whole lot, but there's plenty of things in here to log, and for your own experience, log your observations, note the things that you are tracking in your own development. I don't want to give you things because they're all at different levels of your development. I don't want to just sprinkle the charts with too many things, but the main logic and narrative, I'm kind of like keeping you focused on that. And reminding you that Thursday is going to be the day that I think the cleanest price action will be available to us. And we'll see what we get in response to that. Until I talk to you tomorrow in our midweek review, be safe.